In this video, we are going to be looking at the task. In the first class and second class of APC 2019 past paper, we looked at the pre-release information. So we look at the background information of the company, which is OICOS, and we also looked at the trigger documents, which is trigger document number B, as well as B to E, right? So now what are we going to be doing? We are going to prep you towards the day of the exam. So what are you expected to do when you get to the exam room? So in this case, the candidate had 8 questions. So they needed to respond to 8 questions in that exam setting. So in that 8 hours, they were supposed to respond to the total of 8 questions. So now, how are you going to prepare yourself for this 8 question? It might look heavy. It might look like it's a lot of question. But if you have prepared yourself well enough, you will be able to finish the paper. Number of candidates are able to finish the paper because they are able to prepare themselves very proper on the day of the exam. So now, how are you going to prepare yourself on the day of the exam? In the first 2 hours, I'm expecting you to be just doing a preparation. So what do I mean by a preparation? If I'm saying you are just going to be doing a preparation, you need to write a summary point of every question from question number 1 to question number 8. What do I mean by that? Let's just say, for example, document number 1, it talks about assessment of risk of material misstatement in the financial statements. Now you have looked at the information on the day and you realize that you need to cover all assertion for investment property or revenue, right? So for all those assertion, you're going to write the assertion and then just in point form, state what you're going to be addressing. For example, you're going to say valuation and then under valuation, you say VAT, right? Or you say expert, right? So you're going to say VAT, and then next point you say expert, but you do not write in full, right? You're going to just say evaluation, then you say VAT, and then you say expert or additions, right? Whatever you feel like it will be important to be addressed under valuation, you're going to put it under valuation, right? And you do not complete the sentence. Candidates, please take note. You do not complete the sentence because in the first 2 hours, you will be preparing yourself to ensure that when you have looked at all the questions, then you will go and answer in full the one that you are most comfortable with. So now you'll be looking at document number 1, write just in point form the things you need to address, move to the number 2 until number 8. So when you get to number 8, you will know all the points that you need to address per question. Now you'll be very clear in terms of, for question number 1, this is what was asked. Question number 2, this is what was asked. And these are the things I need to address. So when you are sitting 2 hours later in the exam, you know which part or which question is the easiest. Which question are you going to spend less time on? And then in that question that you know for sure, you're just going to spend less time on, you will start with it. All the questions that you feel like they are the easiest, you'll start with them. And the reason you are starting with them, you want to gain confidence in the exam. They will assist you to ensure that you are gaining sufficient confidence for those that are harder. Or for those when we're writing in point form, you are not too sure about things you need to address on them. Now, let us say now you are sitting on 6 hours later in the exam. And the questions that you could answer very quick, it was 6 of them. Now you have 2 hours and 2 questions that you believe are a little bit harder and you have not attended to them. Now you will then start on those questions. Separate 1 hour for each. I promise you, candidate. And that point, even those that you feel they are the hardest, you will still be able to get B, C, or C on them. And the reason you will still be able to get B, C, or C on them, and the reason you are going to be able to do that, it is based on the fact that when you are left to those two questions, you've already answered 6, and your confidence level at that point will be high. You'll be so relaxed because you feel like you have 1 hour for each of this hard question that you believe are not the easiest. So that setup in the exam will make it very easy for you to be successful in the exam. So I'm here to equip you and train you in terms of what are the best ways to assist you to pass APC when you write in 2025. I did APC for a number of years and I wasn't too sure what I was doing right or what I was not doing right. So now I realize on the last year, which I passed, the issue was the lack of exam preparation. I'll read everything and then write each question individually in full. And it never worked because I continuously kept on failing. So what I want then to do is to ensure that the mistake I did that led me to fail, you do not do them in the main exam when you write in November. So now let us look at the question that we're going to be looking at today. So that our main focus or the question that we're going to be looking at today, it will be document 1. And in this video, our main focus will just only be on document 1. So we'll do document 1 in full, make you understand the points that you needed to cover or the candidate needed to cover in the exam in 2019. And then I will then show you what you were supposed to be doing if you were writing this paper, or what candidates were supposed to be doing when they were writing this paper. Right. Now, document 1, it's coming from Henry, and it's about the assessment of risk of material misstatement in financial statement. You will remember when we're going through pre-release, when we look at the part or the trigger that was talking about the matter surrounding the audit procedures, I stated if you are a candidate that is not in auditing, you need now to use the assistant of other candidates that are in auditing in order to understand what is this risk of material misstatement, how to identify it, and how to address it, right? Also, because we didn't know what was going to come on the day, I did state to you, you need to equip yourself with balances like your investment property, your revenue, because those are the ones that appeared to me at that point to contain a higher risk of material misstatement. And we did speak, it could be due to fraud or error. Now, let me take you back to the pre-release information. And the reason I am doing that, I want you to remember where exactly in the pre-release information this trigger arose. And then you then remember or recall from that point that during the pre-release period, we did identify the trigger and we did discuss that trigger needs to be researched. So the trigger was on the document number C, right? And it is point number 3. Preparation of upcoming 2019 external audit. As in the previous years, my team and I will prepare the file of evidence to support the amounts and disclosure in the 2019 annual financial statements. Based on the evidence that we have received from the ESA and Associate Audit Manager last year, we want to use the risk of material misstatement as a point of departure for preparing these files. The higher the risk of material misstatements, the more comprehensive our documentation will need to be. Our internal audits are currently in the process of undertaking this risk assessment exercise. And once completed, I will forward this to you for your review and input. Right. So in this case, you knew exactly during the 5 days period that you will be provided a working paper with the work that has been done by the internal auditors in assessing the risk of material misstatements in the accounts that they believe contain the risk of material misstatement. So you needed to go and check the amount as well as the disclosure, because you can see here it says amount and the disclosure in the annual financial statements. So in that case, candidates were supposed to go and look at the financial statements of the company, which you were already provided. Once you look at the financial statement of the company, then you ask yourself which transaction or balances contain the high risk of material misstatement. During the pre-release video that we went through, I did discuss that investment property and revenue will be the transaction or account balance that contains higher risk. And I did explain in that video why I believe that was the case. So now you are provided the working paper. So we need to go and check the information of the day and see what is in the working paper based on the information on the day. Now let's us go to the information on the day. So we are looking at the information on the day, which is document number 1. So looking at the document number 1, and then what is important to see from document number 1 is that this is coming from Henry, and it's about the assessment of risk of material misstatement and the financial statement, right? In the financial statement. Gideon Madima's request that I forward the result of internal audit assessment of the risk of material misstatement for each of the line item in the 2019 annual financial statement to you refers. All right. I'm not quite sure whether we are on the right track, given that the external auditor have in previous years not placed such reliance on our risk assessment. Therefore, I'm forwarding our assessment of the risk of material misstatement on the investment property account balance to you first. We would like to use your input to complete the rest of the exercise. So as you see from what you are provided, Henry is telling you that the external auditors in the previous years have not placed reliance on their risk assessment, which shows that the external auditors have realized that their work were hardly on the right path in terms of identifying and assessing the risk of material misstatement. Which means whatever that you are given, that means you need to provide input, because there's a higher chance that there are loopholes that they did not cover. And you, as a newly appointed CASA, you need to then provide the input or the valuable knowledge that you've gained throughout your studies to become a CSA. And then we know that what we're going to be looking at, it is the investment property account balance. So it is account balance of the investment property. Now that means that we are not going to be looking at the disclosure, because already you are told that then you are going to be looking at the risk of material misstatement for the investment property account balance. Now let us look at what has been done. We would like to use your input to complete the rest of the exercise. So it has not been completed. So they have not completed the work. So they want you to review the work, or rather review what they have done, and then put the coaching note to say this still need to be done. Now, this is what we have done so far. So they look at 2018, 2019. So these are converted into thousands, right? So now investment property balance. when you're looking at the previous year, which is 2018, the one that has already been audited, it was sitting at less than 1.1 billion. Just more than 1.1 billion. Less than 1.1 billion, but more than a billion. So if you can say it, it was 1 billion 4,906, right? And then in the current year, it was sitting at above 1.1 billion. So it won 173,857. And last year it won 044,906. Then if you look, there is an increase from last year. It is a very significant increase from last year. If you can just take the calculator and work on the numbers, you will see that we have like a very big increase from last year. It is more than 1 million, right? And then change of the previous year, that percentage change on the previous year. So that year it was 15.18%, and then this year it is 12.3%. And then the percentage of the total asset, when you look at the total assets of the company, that is 95% this year. Last year it was 94%. So what does that mean? It means that it's either there's an acquisition here. If it's not an acquisition, then it means that they've made sale of other asset. So now we're not sure. Let us read further what are they saying. When you go down, assessment of risk of material misstatement is high. So as you see this, that they're saying the risk of material misstatement is high, and you know that we're looking at account balances, you can then make assumption that they have some loophole. And the reason I'm saying that, it is because you cannot, for the account balance, say everything is high. There can be other balance that other assertion that are high, and other assertion might be medium, and other might be low. So for you to just say overall, you have assessed the risk to be high, then it means that you've missed the point that the account balance need to be assessed on different assertions. And what do I mean? That it will be your existence, your valuation, your completeness. So now you cannot say overall all those assertions for the investment property is high. You need to look at each individual assertion for the investment property and then state whether for that particular assertion is it high or low, or is it medium, right? Now let's just look at the justification, because they've provided the justification to explain why they are saying it is high. And when we move down, they say the balance represents by far the largest account balance in the 2019 statement of financial position. So their first justification of saying this is high, it is because it is the biggest balance. Now, when you're looking at the risk of material misstatements, the risk of material misstatement cannot only be because the balance is the biggest, right? Or because it's 95%. They have to be a reason beyond just account balance being high. Because it might happen that the account balance is very high, but absolutely there is no risk in terms of the entire or all the assertions under that account balance. So now just as you look at large account balance, it does not explain correctly why there's a high risk of misstatement. And then when we move down, they're saying there has been a large increase in the account balance from the prior financial year, and the amounts may have been misstated and the valuation was not done correctly. So now, as you see here, now they seem to be getting closer. They are now warm. They are getting closer to the correct answer. And the reason we're saying they're getting closer to the correct answer is because they are now saying that because of the increase in the balance from prior year, there is a risk that there could be misstatement. Right. But they still talking about this at a high level. So you want to hear more detail. And what I mean by more detail, I mean that they might be stating that the VAT might have not been excluded, I'm expecting that they might say things like, if they were doing valuation, the expert that was doing valuation is not knowledgeable. I'm expecting to say they've included the current acquisition before it was registered in the deeds office. So whatever that they're saying, it needs to add the value. So if it doesn't add the value, it is not worth it. As an accountant, you know that your main existence is to add value. So now you are here to assist them to bring them to the correct line. So you've realized that they do understand that this increase in the balances from prior year as well as the current year, it might result to amount to be misstated if the valuation was not done correct. But by looking at the way they are stating, they're looking at a very top layer. They're not diving down to explain more. Because a person that doesn't know accounting or have not done accounting in the past might struggle to understand what do they mean by this. So now you want to make it very clear what is the reason you believe in this case there can be misstatement because of the increase from the prior years as well as the current year. So here they've only touched the prior year, but now you need to look at both the prior year increase as well as the current year increase. Now they're saying the new shopping center was acquired during the year. The cost relating to this may have been capitalized incorrectly. Okay, so they've looked at valuation. They show that's the big concern about the valuation, and they are stating that the reason is because when they're capitalizing this new shopping center acquired might have not capitalized correctly. And obviously, it is new and the number of items that need to be capitalized. So, what can you see from what we see in the justification? They've touched on the valuation. However, even though they've touched on the valuation, they have not get deeper into the crux of the matter. So, you are happy, partially happy with what they've stated, but they've only covered valuation and not the other assertion. They've not covered the existence. They've not covered the classification. They've not covered the right. So now you are looking at this justification and you say the only thing that has been covered is valuation. What about other assertion? Because in order for the auditors to be able to place reliance on our work, they need to see that we've covered all assertion relating to the investment property of ICOS. Now, let us look further and see what Henry wants from the candidate or the newly qualified CA. Are you in agreement with this assessment and the justification for it? If not, please provide us with a revised risk assessment for investment property to use as an example or template on which to base the risk for the rest of the item in the financial statement. Please also include a detailed explanation or justification as to how you arrived at your conclusion. That will help us to understand the thought process you followed. Your assistance will be greatly appreciated. Kind regards, Henry. So now what do you see here? Candidate, you can see that Henry is saying, we've done the work, you've seen it above. If you're in agreement, please say so. If you're not, please provide us a working or provide a detailed explanation commenting in terms of where did we not get this right, so that we can use that as a template for other transaction amounts and account balance. So now you have realized that what they did, they've missed out the fact that all other session had to be addressed. So now you're going to have to explain to them, hey, Henry, thank you for what I've received. I've looked at your work and these are my concern. And then you then state that all assertion should be addressed. However, I've realized you've only touched on valuation. Now, here's my work based on the information that I am aware of about this company, about Oikos. Then you state all assertion and you provide the risk and you state whether it's high, medium, or low for all of the assertions. Right. Now, we have seen what we have here. Now, I want us to go and look at the task, read the task, and see what are required based on the task. Then, once we're done, we'll then look at what we have and the solution. Now, what we're looking at now, this is assessment of professional competence task. So now we are going to be looking at the task, and again, this is about Oikos Property Group Pty Ltd. Everything is written to a newly qualified TSA, so you're expected to be adding the value to the company. Now, let's just see what is required. So, A, which is what is our main focus for this video, respond to Henry's email request regarding the assessment of the risk of material misstatement and the investment property balance. Assessment of the risk of material misstatement in the investment property account balance. Now we've looked at the question. So the question, we need to respond to Henry's question in terms of, is the assessment correct? If not correct, provide a detailed response so that they can use your response for other transaction or balance going forward. Now, what we're going to do, I will take you to specimen, and we'll go through specimen together. And as we go through specimen, I will let you know why that was considered. Why was that added in the specimen response? So I'm trying to make you understand the importance of the specimen response and reading the specimen response with a proper and good understanding. Now, in a few minutes, we're going to be in a second, we're going to be in the specimen response, and then we'll all dive together. Okay, now we are on the specimen response. I'm not going to read the specimen response, especially the first part in detail. However, what you can understand from the specimen response, they are explaining that candidates was given the trigger, right? And the trigger was on the release information. So that was in the page 14. We've already looked at page 14 and we read the part which was triggered. And the part that was triggered is when the CFO told you or told the candidates that the internal audit is working on the working paper. And the working paper will be done to address the risk of material misstatements on those account balance or transaction that they believe has higher risk of material misstatement. And the CFO told you on the pre-release, which we looked at earlier in this video, that what they will do after they've done the work, they will give it to you for your review. So before you even went to the paper, you knew that this was an auditing question and you were supposed to prepare for yourself for the risk of material misstatement. So you needed to understand the risk of material misstatement, especially at assertion level. During my video of the pre-release, I said you should have also looked at overall. But now you see that because the main focus was on the account balance and disclosure, the biggest trigger was on the part that refers to the balance and the transaction amount. Now, what you needed to do as a candidate, you needed to go and read ISA 315, understand what is meant by existence, right and obligation, completeness, accuracy and valuation, classification, as well as presentation. And the reason you needed to understand the risk for presentation, because when you were looking at the pre-release, they said balances as well as the disclosure. So now that you have looked at all those assertion and you understand them during the 5-day period, you needed to understand that for each and every assertion, you needed to treat them in isolation. And when you treat them in isolation, what does that mean? It simply means that you're going to have to say for each and every assertion that you've looked at, whether it is a high risk, a medium risk, or a low risk. So it was incorrect for Henry and the team to look at the entire session combined together and say the risk is high. Because in some of this assertion, it might happen that the risk is not high, however, it's low. For that reason, it was very, very important that the candidates were well aware that the biggest trigger here was to ensure that you split the assertion and discuss them in isolation. So now let us look at what you needed to think of when you were writing this exam, or what the candidate rather that was writing 2019 paper was supposed to look at. We'll start from here because I believe this way the tracks of everything is sitting. The context of AUKUS, the following was considered appropriate in terms of addressing the assertion for investment property. So we're going to first look at existence. So what are they saying? They're saying AUKUS and rental income from the property. The size of the properties are large and hence it may be difficult to manipulate or overstate. In addition, it could be relatively easy to verify the existence of the properties. The risk that could increase the risk of material misstatement for existence is the fact that the new property was acquired and the existence could be in question, which based on the value of new property could have material impact. Hence, low or medium could be accepted. So now, when you're looking at this one, I'm going to tell you what I believe should be and why. So in my side, I'll say first, my view, the risk is low. So you can see here the same candidate could have said low or medium. I'll say the risk here based on my view and which is what SAICA is looking at. You need to state your view. And if SAICA is happy with the view, obviously you are going to pass because you need to put your opinion and your opinion must be justified by information that you have or must show that you understand what is going on. So when we're looking at the existence, I'll be very clear to say the risk is low. And the reason it's low is because if, because they're saying they have 20 properties, it is very easy to confirm the existence of properties or of those property, right? You can do that either by going to physical verify them, or you can do that through deed search, right? Because deed search will tell you where the property is located, right? And then you can even go check on the map and see whether that property exists, or rather go physical verify. So you can verify them through deed search as well as using the map, right? If you feel like you don't want to go to that property, and obviously deed search will say that this belongs to ICOS or it doesn't belong to ICOS. So now the existence will be very easy to verify either through deed search plus the map, as well as by going to physical verify them. So that is my justification of saying the risk is low when we're looking at existence. And number two, if we think of the new property, if the new property is not registered in the name of ICOS, it should not be part of the property that existed at the end. So the risk is low on the backdrop that if it is not registered in the deeds office and is not part of the deed search, then you know that they should not have that. So the risk is low because it can easily be verified by looking at the deed search. And if the deed search doesn't confirm that this belongs to ICOS, then you know that they do not have that property as at year end. So now can you see how easy it is? You just need to understand when a person says, I have a property, how do you confirm that that person has a property? First, you can verify the property by going to see the property. And the second thing is the fact that it will be part of the research for the company. If they add the new property needs to be added in the company's property deeds on the deed search. So it has to go to the deeds office. And then what is in the deeds office, you will be able to verify that the property that they said they bought this year, it was indeed recorded in the deeds office. Because the risk that might happen is that it might not be registered by the time they close the books. In that case, it didn't exist at that point because it wasn't their property, right? So now looking at that first, I'll say the risk is low, and my basis is what I've already stated. Physical verification and deed search. So it means that the risk is low. Now we look at the existence. Now let us look at the right. What the candidate was expected to cover in terms of right. As OICOS uses interest-bearing borrowing. So I've tried to adjust the solution because it was looking small. So I'm trying to make sure that you can see properly. So then we'll continue. So we are looking now at right. As ICOS uses interest-bearing borrowing to fund the acquisition of properties, it is likely that the investment property is held as a security for those loans. ICOS financial position is strong, hence it is highly unlikely that the right has been impaired as a result of non-payment. A factor that could increase the risk assessment is the possibility that the right of new property acquired had not transferred to OICOS by year end. A right assessment for this assertion of low or medium could be acceptable. So in this case, what am I going to say? I will say it's medium. And I'll provide my justification for saying the right I believe is medium. So when it comes to security for loans, yes, they might have security for loans, but remember, this company has been in existence for a number of years. So by 2019, they were in existence for almost 20 years, plus or minus 20 years, because they were established in 1999. Some of the properties already might have been paid off. And once the property is paid off, it will not be under security because it will be belonging to the company. So now those properties that are no longer under securities, what if they have sold them? So now that is the reason I'm saying the risk for my side, I will say it medium. Because now, even though the properties that are under loan might be under security, and we can confirm that if you are we're requiring the bank confirmation or the confirmation of security from the bank. However, those that are paid up, it might happen that for those ones, they were sold immediately when they paid off all their loan. However, we still need to take into account, the reason I'm saying it's medium is because the company, if they took out 20 years home loan, there are very few of them that might be already paid up, right? So in that backdrop, then the risk is medium and not high, because it might be like few of them or one or even none, right? Because we don't have like full information in terms of how they made payment of those houses. So I'm going to keep it medium. And those are my bases, that what if those properties that have been paid up were sold, but they still in the asset register or the investment property register of the company, meaning to say they do not have rights because they were transferred out in the deeds office. And then the other part. So when you're looking at the right, they have the strong financial position, and the strong financial position is based on these assets they have might not be ceded bank to the bank, on the first that it can only be ceded if they're no longer going to be able to pay. And in that case, we know that they're not struggling in terms of the finances, right? The bank balance might look like it went down when we're looking at the financial statements, but it's still positive. we can we can all confirm that it's still positive. And as we saw that it's still positive, it means that the company is not doing bad. And with that being said, we know they're still waiting for the money for the clearance in Zambia bank, because they made a sale of 20% of the company that they own in Zambia. So now you can see that when you look at right, we do consider the fact that because they took loans to buy this asset, what does it mean? It means there will be security, and you can confirm that through confirmation, bank confirmation, that indeed this asset under security. And we know that they will not be ceded because they are doing well. They're not doing bad in terms of finances. Therefore, those assets that they have security for, they still under their name. However, now we need to think of the one that was added this year, because we've seen them making addition on a yearly basis, and they've told us as well that they've made addition this year. So there might be a risk that that one has not been transferred to the company, which increases the risk. Then it justify why we're putting the risk at medium for the right. So what we've covered for the right, we look at the security for loans for this property. We look at the fact that the transfer might not be completed for the property that is acquired this year while it is recorded in the company's books. And you look at the fact that for those that are under security, they are not ceded back to the bank based on the fact that the company is pretty much not struggling. So now we've covered the two sessions. We'll look at the existence. I will say it's low. We'll look at the right. I did say it's medium. And I put the justification in terms of why it should be medium. Now let's just look at the next one. And the next one, it's completeness. So now as you look at completeness, so now let us read together and see what the candidate was expected to say under completeness. Given the magnitude of the amount relating to investment property, it would be relatively easy to detect the failure to complete for the purchase of the shopping center. Because it's a private company, well within loan covenant, questioning the incentive to not account over state investment property, regardless of the value of the property, low could be accepted. So now, when you're looking at the completeness, so now the chances of them not accounting for the property, it's very low. And I have reason to state why it's low. The property is so big, it's very, very minimal that if they have 20 property and they record 19, they might not see that they've missed one. Because property, it's not a small item where you can easily omit. Because of the size and the number of properties, the chances of omitting those property are relatively very low. Number two, they wouldn't want to miss any property because they have covenants. And if they do miss any property, that means that they might breach the covenants. And they do not want to do that. So that case, I do agree that the risk is low based on the size of the properties and the covenants they have in place. Now, when we move down, there's accuracy, valuation, and allocation. I know one would ask, but why do we have accuracy taken into account for the accounts balance, which is investment property? The reason that accuracy you'll always see when we talk about the things like the investment property, like the PPE and stuff like that, it is based on the backdrop that when we're talking about the PPE, it needed to be adjusted from the initial balance down to the latest balance. And by doing that, there's something called fair value adjustment, amortization or depreciation, whatever you call it. And that is a transaction. And the transaction is accounted for as part of transaction assertion, which is accuracy. Now let's just read what we have under accuracy, valuation, and allocation, and then we'll then justify what do we think is happening. Given the materiality of investment property, the large increase in the account balance in FY 2019, the risk of material misstatement is increased. Because in addition, acknowledge the acquisition cost might not be capitalized. Maintenance cost could be capitalized and the VAT included with the last acquisition influencing accuracy of the balance. Valuation of investment property is also subjective. The appropriate assessment of valuation assertion should be high. I do agree with high. The reason I'm agreeing with high, there are a number of things that could increase the risk of this assertion. Number one, they've acquired new asset during the year, or rather new investment property during the year. So the what is capitalized in the books of OCAS for that new asset might be incorrect. And the reason for that, they might not have excluded the VAT when they were acquiring this asset. That's number one. And number two, what you could say could potentially happen. The other thing that could have happened, or rather, let me say, could have potentially happened, is the fact that they might have capitalized the items that should have not been capitalized, right? Or missed those that they should have capitalized. And then during the year, they did fair value adjustment. So during the fair value adjustment, it might happen that they did not use the expert or knowledgeable expert. And we must take into account the valuation is subjective. Due to subjectivity, the risk of accuracy valuation and allocation is further increased. Therefore, the risk for valuation is high based on the backdrop. Right. Now, classification. Only properties are used for the rental income and will satisfy International Accounting Standard 14. The sale of Kusuba could mean increase, could mean that we no longer consolidate Kusuba investment property with OICAS, hence low or medium. If well explained, what increase the risk of material misstatement, assessment could be acceptable. So now what is happening here? When it comes to classification, the classification risk is very low. And the reason it's low, number one, when you're looking at the threats that they are using all their investment property to rent out. So the classification is very easy, right? They're going to be using International Accounting Standard 14, and then classification is the same. However, because they've made a sale during the year of Kusuba investment property would have been capitalized throughout the days when they had 80%. But they did tell us that when this sale of 20% was made, there was a change in terms of control structure, control decision. So, which meant they potentially have lost control. So now then the classification of that one will therefore not be correct. And then in that basis, medium will be the correct risk level and based of that sale. So in terms of the fact that most of their property we've looked at to be the property that are classified the same, it's low. But what increased it because of the sale they made during the year. Now, when you move to presentation, the presentation you could say is low. However, there was nothing much that we have that could justify whether the presentation risk is increased or not. There is no indication into what we know. The presentation has a risk of being material misstatement, therefore, low assessment of presentation assertion will be justifiable. Now, for the candidate to be competent, a competent candidate would have assessed majority of the assertion for the investment property appropriately, including indicating that the valuation assertion assessment is high, given sufficient detailed explanation of why valuation would be high for investment property in OICAS. So many candidates with an overall assessment of risk of material misstatement for investment property, which is not appropriate, as not all assertion related to balances will be considered high. So at the beginning, I did say to you, you need to understand that you cannot look at all assertion together. You need to look at them in isolation. So now let's just ask ourselves, what is that thing that the candidate wrote this paper, that's include myself in 2019, did incorrect? The candidates often went beyond the scope of what was required in performing the task. So the task only required the candidate to look at assertion, state what increased the risk of material misstatements, and what level is the risk of material misstatement is sitting at. But the candidates, they decided that which happened that I might be part of this candidate because I failed this paper, they made up controls that could lower the risk of material misstatements, which in this case, task was not considered appropriate because no information was given on the controls that AUKUS has in place could the various assertion for the investment property around the various assertion for the investment property. They described how to go about getting an understanding of the entity and what analytical procedure to perform, which was not required. And some candidates also gave procedure on how to address the risk, which is mitigating your detection risk, which does not form part of risk of material misstatements. So now, what SAICA is saying is that other candidates, they decided not to respond to what was asked. What was asked is that you look at all assertion. First, you look at what is done and you realize that what they did is not sufficient. And then, based on the fact that what they did is not sufficient, you needed to add your knowledge and understanding to make the list complete. And the list to be complete was going to be made by you addressing all the assertion and the investment property. So that all the candidate was supposed to do, fill in the gaps. After filling the gaps, state what increased the risk of material misstatements, what decrease it, and state overall where the risk of material misstatement for each assertion is sitting. So that was what was required for candidates. So please make sure that you understand in the exam what is required of you, because that will determine whether you pass or you fail the exam. This is taking us to the end of this question. I wish you all the best as you prepare for obviously the main exam. I wish that you follow me for part B on the separate video. So part B will be covered on the separate video. For now, all the best as you prepare yourself.